Here's an example of how to use a strong trend on the daily time frame chart to pinpoint intraday volatility-based entries. Let's start with the daily time frame first. On the daily time frame, you can see this line right here, very clearly green. If you look in the top left, you'll see the market stage currently in a state of acceleration. This was the case even when price action was gravitating towards our volatility box levels. Now you can see where the actual orders that I had for buying came in. They all came in near the 43.45 price point. Why that price point? If you come into the daily time frame chart, that's where I expected to find some support. That's the previous high, also overlaps nicely with the market pulse line, a place where I expected to find some buyers to step in. Now on that 5-minute time frame chart, we can see the first time that momentum crosses in the favor of the bulls in this green candle right here. This is 9:45 a.m. Pacific. Now you'll see I broke my no lunchtime rule here to start to use that final end of the lunchtime hour to accumulate entries at a slightly better price. Lunchtime hour ends, we see that momentum cross one more time, and after that is where price starts to move in the bullish direction, away from our volatility box models. So we sold off straight into our conservative volatility box models, and we bounced up really nicely from there. The risk to reward on this particular trade was quite nice. From the conservative models was less than about a 40-cent risk, but in terms of the upside move made nearly a 2x, close to a 3x, but we fell shy of that in the final few minutes of the hour. Now I got out before the final hour where I thought we would have a sell-off into the close. Instead, we had that final last burst from the bulls, which comes back to our weekly and daily timeframes, suggesting that this was an intraday volatility opportunity in what is otherwise still a long-term healthy trend. That was the setup I was looking at inside of Freeport. Now there are a few others that also hit the radar. Another one is inside of XLB, the materials ETF. Now if you contrast this setup with the one we saw inside of FCX, we didn't see that same burst of activity from the bulls. In fact, we saw more sell-side activity. We saw the momentum cross here, but really the bulls were never able to really break above 89.50. Sellers held 89.50 quite well, which if you contrast that with FCX, we didn't see that same degree of support from the selling side. Now, if you take a look at where the support is on XLB, that's closer to 89, and I expect tomorrow 89 to be a key level in XLB that I'm looking to play. Now, I doubt the daily models will be useful tomorrow inside of XLB, so that's where I would stick to the hourly models here as well for additional hours that would adapt to tomorrow's volatility condition, knowing that that 89 price point is a place where we expect to see some buyers to step in. So that's how I use the overall longer term time frame, in this case the daily, using the market pulse line to find places in which our market stage is still in a stage of acceleration or accumulation. These are the two bullish market stages. If we can see that along with an intraday volatility opportunity, an opportunity where we have the edge on our side, like this one inside of Freeport, those are opportunities that I'm happy to take given the risk to reward is very much skewed in our favor. Risk 1 to try and make at least 1 if not 2, and in this case, very close to 3. I hope you found this video helpful in learning how to use some of our trend indicators along with the volatility box to make sense of the market, both with the daily time frame along with the intraday volatility. Take care, everyone. Good luck trading. If you have any questions, feel free to send us an email at contact@tosindicators.com. See you in the next update.